Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit in Equities. In this video, we'll be talking about a lesser known microcap stock from the fluorochemical space which has all the potential to be a future multibagger. Please watch this video to know more. Now, the company in question is Tanfac Industries Limited, which is available at Rs 283.05 and the face value for it is 10. The symbol for it is TANFACIND. Now, Tanfac Industries Limited offers aluminium fluoride, AHF acid and sulfuric acid, also deals in specialty chemicals. Now, Tanfac Industries is a JV of Aditya Birla Group and Tamil Nadu Industrial Development Corporation and is one of the largest suppliers of fluorine-based chemicals. Its products find use in applications for various industries like aluminium, oil, refrigerant gases, steel, glass, ceramics and fertilizers. Organic fluorine-based chemicals are also used as intermediates for pharma and agrochemicals. Now, operating profit for this company jumped 3 times, aided by higher sales at 57% year-on-year. EBITDA margin also surged to 27.5% versus 13.9% in Q1 FY18. The company is witnessing strong growth with operating profit CAGR of 38% over FY15 to 18 on account of end market improvement, lower operating expenses and changes in product mix. Last fiscal, company's sales increased by 19% year-on-year on account of higher sales and an increase in prices of products such as hydrofluoric acid, sulfuric acid and aluminium fluoride. The company reported that higher realization of hydrofluoric acid was an account of continuous penetration in photovoltaic and specialty grade HF markets and partial pass-through of increase in fluorspar prices. The factors favoring this company are increased product diversification with a higher share of specialty fluoride. Value-added products like photovoltaic hydrofluoric acid have an increasingly higher revenue share. Now, the key risk for the company is a dependency on imports for main raw material fluorspar, which is majorly imported from China. To reduce the risk, it has expanded vendor base of Chinese origin. The company has also developed sources from other geographies and expanded the relationship to reduce dependency on Chinese origin. The company has a leveraged balance sheet, while the debt-equity ratio has reduced from 14 crores to 1.9 crores in FY18, it is still elevated. The stock has rebounded strongly from its recent lows and is trading at 14 crores, its 12-month trailing earnings. On account of improving end markets, investors can look at accumulating the stock on lower levels. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. We'll be providing the link to the source for this video in the description section. Thanks for watching. If you have not yet subscribed to this channel, please consider doing so.